Hello, Smart Energy Podcast listeners. Welcome to this week's show. My name is Kirk Chisholm. I'll be your host. So today I'm joined with Marc Walton. How you doing today, Mark?
I'm doing good, thank you.
Good, good. Well, glad to have you in the show here. We're going to have an interesting conversation with Mark today. Mark, tell us a little bit about your background before we kind of dive right in.
I had a few offline businesses in the UK, and then coming up to 40, I'd had enough and said, even though I was making good money, didn't want to do this anymore. Sick of the politics, sick of the weather. So we sold the house, main house, sold the business, bought some rental properties, which 20 odd years ago was probably easier than it is now, and money was cheap. And we went and emigrated to an island off the coast of Africa with one suitcase each. And amusingly, we also then re-emigrated from the Canary Islands 4 or 5 years ago to Portugal with the car full, the dog in the boot, and one suitcase each again. So I went from earning decent income from the business I had and employing a lot of staff to singing and playing guitar in a band. And after 2 or 3 years, it was not sustainable. I thought I'd retired at 40. I had a lump of money, I had the income. And as you realize, if you try to retire, that you spend a lot more money than you do when you're working because you've got all the free time. And so I stumbled into Forex trading in the early 2000s, and it wasn't such a thing at the time. Spent 2 years, bought a DVD, spent 2 years trying to learn it by myself and losing money, and eventually found myself one of your countrymen as a mentor. And thankfully, he helped to sort me out. And within a year, I was trading for a fund and then started my own fund, loosely termed, because the way it would work in Forex is you could get individual clients. They would all put money into their brokerage account, and the broker has the software to amalgamate all the accounts. And then at the end of the day, you split the P&L. And I also started posting on Twitter 2008 when it started, when it wasn't quite the hate fest it is now. And I was sharing tips and advice, and I got people asking me to teach them. So then I started to teach people as well and created a website for that. 2020 was getting bored with it, came up to 60 and stumbled on crypto and managed to catch Bitcoin at 8 grand and Ethereum at 180 and Cardano at 8 cents and things, and did extremely well out of it. I'm semi-retired now, but I invest, I trade, I do stocks, ETFs, options, crypto, gold, etc.
Well, if you got in an early enough stage with crypto, I'm sure you're retired 10 times over. I mean, the gains on
Well,
those things have been crazy.
if I'd have got in 2010, I would have been retired a lot of times early. I
Yeah,
think a dollar in 2010 is worth 1 billion today or something insane.
I know it's
Um,
crazy.
but yeah, I think is I didn't get it before. I actually had one of my clients tried to persuade me to mine crypto in 2015, and I really just didn't understand it. And it depresses me how much of the mainstream media still don't understand it to any degree. And even the Financial Times in the UK, supposedly one of the top publications for finance, is still anti-crypto. It's been doing 150% KGO for the last 15 years. It's rubbish. It's a Ponzi. It'll never last. Oh, please, just try study it a little bit. And if it all ends in tears, if you've managed it properly on the way up and taken your stake out and taken some profit, it won't matter. But I think it's got the legs, and I think it'll keep going. All right, certainly the big stuff will keep going. A bit like the dot-com boom. I was involved in stocks in the dot-com boom, but not professionally, and I hung on too long and suffered the pain of that. So with crypto, I was very much with my clients. Look, when it doubles or trebles, we take the stake out. If it quadruples, we take profit, etc., etc. And Bitcoin was actually easy. 2020, 2021, until it tanked, it went up. If you're a technical trader, it went up, it pulled back, it went up, it pulled back, and it was pulling back into fib levels and a trend line and an EMA. It was easy, but it was a case of being in the right time, the right place at the right time for sure.
Yeah, it's interesting. I mean, I don't know if you saw the news, but Vanguard bended the knee this week.
Yes, I saw.
And now, after a long time of saying, crypto's the devil and we're never going to do it and it's not for the passive, and I've got like a whole list of quotes that their CEO came
Yeah.
out and just railed against crypto and it's terrible. And they bent the knee this week and just said, all right, we're going to allow it on all our platforms. It's kind of like the hypocrisy of Wall Street. Just,
Yes.
I've been doing this for a long time, and
Yes.
it never stops.
Yeah.
J.P. Morgan, BlackRock, all of them like, oh, it's terrible, it's awful, it doesn't make any money, it's a
Ponzi.
Ponzi scheme, and then they all do it because they say, well, we
Yeah.
can make a lot of money in it, so who cares?
Yeah.
It's like, come on,
Well,
don't you don't have any you don't have any moral high ground. You never have, so stop
no.
trying to find it.
Well, the other week, Jamie Dimon came out and said, actually, there's a case for gold. And the very next day, it dropped 10%. And I just said to clients, I said, if you've never realized before how rigged this all is,
Oh God.
he's never been interested in it. And suddenly, oh, well, now is a good time. And then the classic one was about a month ago, 6 weeks ago, when we had the big flush in Bitcoin, the original one on the Friday. On the Monday, Larry Fink came out and said that Bitcoin was as good an investment as gold. And it's like they're just laughing at you. If the guy in the street doesn't get that, then God help them. Because if you don't understand the rules, I did a podcast, a webinar in October 2020, and I said I thought that crypto could be the best investment in your lifetime. And part of the things I was talking about was inflation with everything that was going on with COVID. And at the same time, the same week, the Fed came out and they said that we envisage that inflation will be zero until 2024, and we're going to try to push it up. The head of the ECB, Lagarde, in her best Inspector Clouseau accent, said, it's just a little ump and it'll be down next year. And it's like, for crying out loud, it's no. They take out, but the downside, of course, and what I said to people in this presentation is, look, at the moment, Jamie Dimon's saying, oh, anybody that works at JP Morgan that buys it is out on their ear. It's a racket, it's dirty money, and all the rest of it. And I said, when this lot come in, it will bring the volume, but it'll bring the dirty tricks. And I'm pretty sure that what's been going on the last few weeks is they've been trying to push MicroStrategy to liquidate
Yep.
because it's so blatant the way that they've been doing it. But within the IBIT ETF, they can be long and short. So, hey, if you've got that much clout, shove the price of Bitcoin down, scare off the balance of the retail, and then mop it all up, is my thinking anyway. Maybe I'm too.
But he was able to make his bond payment, right? So he's in the clear. He
Yes.
can't. Yeah.
Yeah.
So that's kind of gone. But yeah, I mean, but this is what we actually talked about last week in our live episode, and this actual episode will come out much later, so you won't be able to identify it. But I think it was on the. I think it came out actually on the 10th of December.
Okay.
And we talked about this and how effectively you see the Bitcoin price of Bitcoin crashing, and they tried to liquidate MicroStrategies because that would allow it to crash more. But the primary purpose is just because the institutions came late to the party and they want to get in a lower
Yes.
price because they don't want to buy it
Yes.
at 120,000. They'd rather buy it at 50.
Yeah.
Um,
Yeah.
and so I've always been fascinated with Wall Street's dirty tricks. I mean, they're just sharks like fighting each other.
Yeah.
Like, and you just
Yes.
happen to get in the way.
Yeah. Yeah.
Like when
Yeah. Yeah.
George Soros comes out and said, "Oh, short the euro, it's going to zero." I'm like, "All right, I should go long the euro." So
I
he's trying
tell.
to get into the position. He's trying to get you to sell
Wow.
so he can buy it. And
Yeah.
it's that kind of stuff. So it's been happening forever. And some people are better at masking it. Like Warren Buffett is the ultimate PR guy. Like he's
Yes.
got this image of good old Uncle Warren. He's out there helping
Yeah.
everybody, and like, no, that guy's a shark. Like he'll eat your lunch when you're not looking. Like he's bad, but he has this great image, and
Yeah.
people
Yeah.
love him. So
But but with Buffett, you remember after during the big thing with COVID, he came out and he said he wasn't going to sell his airline stocks. And over the next 5 weeks, he dumped the lot. And
yep,
again, it's like grandpa in his rocking chair, lovely fellow. And it's like, but I mean, my philosophy is, look, we're just like a fly on an elephant's bum. If that's the way that they're going to go, we need to go with them.
right.
I think the biggest issue still for the average person in the street that they've no financial knowledge, it still looks too complicated and people are lazy. I just talked to a client now. young guy. I did a favor. I gave him some advice 3, 4 months ago, 6 months ago. And I'm not a licensed financial advisor anywhere, but I just said, look, if it was me, this is what I'd do. And he's German. He was heavily into Porsche, Mercedes, and things. And I said, you do realize the European car industry is getting slaughtered by the Chinese. You want to be thinking about mining stocks and gold and silver and things. And I just literally spoke to him an hour ago and I said, how did you get on? He said, oh, well, I sold the Mercedes Benz and the Porsche, but I didn't get round to buying the other stuff. And it's like, you can do so much in the interim. Some of the mining stocks are up 70%, silver's up to another 25% in the last month or two. People are lazy. And so they just go for the easy option. Oh, I'll just put it in my 401k. And unfortunately, if that's what you want, but I read that the average pension pot for a self-employed person in UK and US is about $100,000. Well, 1 million is not enough to retire on these days. So, I don't understand people. I really don't. So,
Well, I think that's the key. I mean, you know, it's a complicated game, and you know, it's challenging for everybody. But where do you see opportunities? Because you know, you certainly have your focal points, but you know, you're pretty broad in your understanding of things. Like, if you had to look at the markets today and you can invest in anything, like where do you see the opportunities right now?
I rarely buy the FANG stocks. I only bought them in April when Trump blinked over the bond, the Treasury bills. So, and I only buy a stock if I think it can do 25% profit in a fairly short space of time, and crypto 35. I actually think there is money to be made at crypto at the minute. May sound crazy. Maybe that's going to get worse before it gets better. I think Solana as a crypto looks good. It's half what it was a few months ago. But a lot of them with the stocks, I don't know what the situation in the US is, but in the UK, you can buy things like MicroStrategy, Mara, etc. in a tax wrapper. You don't pay any tax. So I'd said to folks in 2023 when Bitcoin set off, this company, MSTR as it was at the time, Bitcoin set off the day before. This company owns a shed load of it. I'm going in heavy. And MicroStrategy went up 1400%. Now, we didn't ride it all the way. We took profit and etc. etc. But if you look at MicroStrategy at the minute, I mean, they've just spent 1 billion on more crypto, more Bitcoin. I don't know why he keeps buying it just whenever, irrelevant of the price, because you could get anybody and his dog with a bit of technical skill could get in cheaper. But he's made a statement. The situation that we said about Wall Street trying to force it down seems to hold. But MicroStrategy is 130% lower than it was 6 weeks ago, whereas Bitcoin is only 35%. So some of the crypto stocks, but it's high risk. In the last few months, I've been buying oh, rare earth metals. We had this scenario 3 months ago. Trump, right, we're going to fall out with the Chinese again. The Chinese have got the West by the short and curlies because they've got control over 90% of the world's rare earths, as we now know. But then we have a deal. Oh, we've got a great deal. Everything's wonderful. But all it needs is China to do something in Taiwan or something to kick off. That problem is not going to go away. And the US government just came out the other week and they've now created a list, I think 50, 60 rare earth metals, one of which is silver. And I've been heavily into silver miners for the last few years. And so, for example, this year, I think silver's up 70, 80%. My best mining stock is up 250%. Because the issue is to build a new mine nowadays takes 10 years and $1 billion in the West. So there's a limited amount of supply. Demand is going up incrementally, and things like solar panels on top of cars and everything else. So we bought that again on the dip the other week. There was a dip of 25, 30%. So look for dips on things in sectors that you feel confident about. The ones I am confident about at the minute is gold and silver. I don't buy anything at the top, so I'm not buying gold or silver today. Started buying silver at 17 and gold at 1700 and have been buying incrementally on the way. If there's a decent pullback in either, I would buy some because for me, I have hedged my overall portfolio with gold and silver and mining stocks. So when crypto tanks, I'm covered. Other things I've been investing in is uranium. The demand for nuclear is going up because of cleaner energy. They're restarting uranium plants in the US. I think Facebook just did a deal with Three Mile Island. A lot of the European power stations now have just extended the life for 5 years. So the demand for uranium is going up. And again, it's limited supply. So I'm heavily into that. And again, there were pullbacks the other week. I've got it written down because I have a terrible memory. Energy, I've been buying energy stocks, US, because the demand for AI with energy is going through the roof. And there was a picture yesterday. I saw this about 18 months ago. There's a photo of a Tesla in California being charged by a generator. And there was a picture yesterday, or I think it was on Twitter, and it was one of the big delivery companies in the US are having to charge up their electric fleet with portable generators. So now everybody go electric. Oh, crap, there isn't enough electric. I think they forecast the demand for electric is going to go up 40% by 2030. Well, hey, if the demand's going to go up, they need it, and the AI is taking all this power. I've been buying quantum computing this year, so that's supposedly the next big thing after AI. And then in general, I dabble in things. If I have cash ready, if the FANG stocks tank, I will buy some more FANG stocks. But in
Yeah.
general, I have zero interest in the mantra of, raise $1 million in your pension and then just put it into dividend stocks because the average dividend stock these days is paying less than 4%. Well, can you live on 40 grand a year max before tax? Yeah, not good advice, I think.
Yeah, yeah. I mean, junior mining stocks are the old school cryptocurrency. Before cryptocurrencies, junior miners acted. They were the most volatile stocks on the planet,
Yeah.
and right now they're in favor, which is a good thing. So yeah, I think that sector is still undervalued. I am curious about your opinions on AI. I mean, I've been on two minds on AI for a while. Howard Marks just came out with a paper. I think it was yesterday or today, um, which he gave his opinions on AI, which in many ways are aligned with mine. But I haven't read the whole paper, but it seems to be similar. But I'm curious your thoughts on AI. I mean, I know there's a lot of money going there. I know that everyone loves it, but to me it feels like the internet bubble, which of course in one way blew up, but in the other way we're still using the internet, and so
Yeah.
it's the question is where's the top, and do you want to be the last
Yeah.
person buying, or do you want to get out early? But what are your thoughts on AI?
I think, I mean, I made money in the dot-com boom, and then I lost money because I hung on too long. But on the other hand, if I'd have got out when the doom mongers started talking about it was going to crash, you would have missed about 2 years of a really, really significant blow off top. But I think the other thing is during the dot-com boom, and again, I've likened this with crypto. I explained to people what happened there were some companies came along. The internet was very new. I think they said the user base was about 10 million. And so it was all new, and there were some decent companies that came out of this and looked legit. But then, just like crypto, I think 5 years ago there was 6,000 projects in crypto. I think there's 38 million now. And so what happened in the dot-com boom was similar, that suddenly anybody that could throw a website together and look really cool and had a good idea was raising millions and millions, in some cases billions of dollars, and they weren't making any money at all. Whereas if you look at the FANG stocks at the minute, they're all sat on a lot of cash, a lot of cash. And I think Facebook's got 50 billion. I wrote it down. Amazon's 94 billion that they're sat on. So the difference to me between the dot com and now is that the top companies are making money. They all made increased profits this year. Yes, they're spending a lot of money on R&D, which is AI. I really don't know. I think the concern is not missing out on potentially more to give from this. And as I say, the difference predominantly to me is that these companies are making money and they are showing a return on what they've been doing. So I think then politically you look at it. If the Republicans want to maintain control of the House next year, they need a boom. They do, maybe they could afford a crash and a pullback short term. But the one thing that Trump would have in his favor would be if the economy's doing really well. And I said a few months ago to Fox, and I think actually he's mentioned it the other week. He said, if he's raised all this money from tariffs and he can suddenly give everybody 5 grand checks, a $5,000 check as your share of the tariff thing, then where will that money go? Well, you would presume it will go into stocks and it will go into crypto again, as with COVID. So at the minute, I have thought for the last 4 years there's going to be a crash. And every year I've been wrong, but I've managed to make money by being diversified, but not in the conventional sense. I have diversified using gold and silver, and I have diversified with crypto as well. So I got out of crypto in 21. I kept the balance of what I had. And then in 23, when it started livening up again, late 22, early 23, I got in again. And if you can catch the right cycle at the right time, I think that, this thing that you can't time the markets is not true either. So I'm more bullish than I thought I would be. But I don't know. What was the conclusion? Now that I've given my opinion, you're going to say you think it's all going to crash. What was the opinion of this paper?
Um, so I only read that. I only read page one because I didn't have time to read it yet. It just came out. But the what I saw, it kind of led me to similar things. I mean, my thing on AI is this. Like you, I also think we should have had a recession for each of the last like 5 years. I mean, COVID, we should have had a
Yeah.
recession. 21, we should have, like all these times you should have, but it just hasn't shown up. Or actually,
No.
it did, but Biden declared it non a recession, so that apparently
Yeah.
officially it's not. But it feels like we're on the edge of the markets declining, and I think a lot of people expect a crash because that's our experience in the last 25 years is a lot of crashes.
Yeah.
I'm not expecting a crash. I would expect something more like the early 2000s where it just declines for a few years. I think that is a more rational way that the market should operate. But just like you said, Trump wants to get the midterms. He wants to, retain power after the midterms. So I expect, even though the second year of presidential cycle is typically the worst of the four, I do expect that Trump is going to pull out all the stops to make sure he retains Republican control, because otherwise, the last 2 years are going to be,
Yeah.
ineffective, and he's got a big agenda he wants to do. So, I think that, it's kind of like December. Like we're in December now. December's traditionally a great month, but this has been a very neutral month. Um, and November also not the best month. And so, to me, it feels like we're fighting against the tide, and maybe we'll win, but it
Yeah.
feels the markets are feeling a little heavy. They're feeling like they're not. There's no momentum behind them. It feels like the wind is already kind of past. I mean, AI. I see the potential of AI. It could do a lot of great things. Everyone's talking it up like it's going to change the world. Yet at the same time, when I got in the weeds with it, it feels like it's. I talked to a client of mine who's been he's basically his job is in machine learning, like that's just what he does. He's like, we've been doing this for like 10, 20 years. I forget what he said, like something
Yeah.
like that. We've been doing it for a long time. This is just we put an outside wrapper on it and called it Chat GBT, but it's like this is machine learning. It's nothing new. It's nothing different. It's just the consumer is seeing it now and it's more visible. And
Yeah.
I look at it and say, to me, this seems like I know the UK, they call it kind of polishing a turd, but like, it doesn't seem like it's all it's cracked up to be. It seems like it's
Yeah.
80% what you need. It's never 100%. If it's 100%, it's useful. But if I have to do 20% of the work, I don't need that. Like I'll go
No.
hire somebody to do 100% of the work. It's not going to be useful for me. If you write 80% of the book and I got to go edit it, well, I didn't write it. So how am I going to edit
Yeah.
it? Because I don't have editing skills. So it puts you in this
Yeah.
chicken and egg problem. Anyway, so my point is, it feels all of the signs that Howard Marks talks about in the paper, and let me pull them up so we can talk about them while we're talking about this.
Ironically, you could ask ChatGPT for a summary.
Yeah, I literally just got the paper. So, but all the things that he talks about in actually well, I'll bring it up while we're talking. But anyway, so a lot of the stuff he talks about were similar in the dot-com bubble.
Mm.
The shuffling paper back and forth. Oh, I'm going to give you revenue. You give me revenue, and we all have more revenue, even though nothing has been generated. Um,
Yeah.
I mean, if you look at like the dot-com bubble, there were some obvious signs, right? You had a bunch of companies with no revenue that obviously weren't ever going to make revenue, right? And it just
Yeah.
wasn't going to happen. And the game was played until people finally were out of money and everything fell apart. But things like Global Crossing, which went bankrupt, is used today. It's actually
Mm.
instrumental in global communications, right? And we wouldn't have had that had we not made that initial
Yeah.
infrastructure investment. And so now they're doing the same thing with AI. There's an initial push for infrastructure investment, but it's in a commodity. It's in a commodity with no moat, right? So with the
No.
dot-com bubble, everyone's like, "Oh, we need this dot-com address." No, you don't. General Electric, you're just going to go to generalelectric.com. You're not going to go to like aircraftengines.com. You're going to go to General Electric because that's how it goes. And I think AI is kind of similar. There's no moat, there's no protective moat around it. I could easily create my own AI. People do it. It's all open source now.
Yes.
So you can go create your own. You don't have to pay these people. You don't have to worry about them stealing your data. You got your own. That's happening now. So why
Mm.
would I mean, people use ChatGPT because it's progressing fast and they're at the front end, but at some point that growth is going to slow and people are going to realize I don't need this anymore. Their business
Mm.
model is not profitable anyway at the moment. Maybe it does down the line. And so I think we're in for a crash at some point. Now, whether it happens today, whether it happens 2 years from now, I don't know. I know
Mm.
it's definitely going to happen because the numbers are the numbers. You can't make
Yes.
numbers lie, even though they try
No.
really hard. These companies aren't lying. Like the footnotes are in their annual reports, their quarterlies, that what they're doing. So nothing illegal is going on. But at the same time, it's totally unethical what they're doing, and
Yeah.
it's not sustainable. So my opinion is yes, AI is a good thing. It's not a great thing. I think we'll find out much at some point soon that it's going to underwhelm a lot of people. Like this AGI quest might happen 20 years from now, which case it's like,
Mm.
and no one's getting productive use in a meaningful way from their employees. It's like nice to have, but not a need to have. So it's not changing lives. So I think it's kind of one of those shiny objects that come up every once in a while, and
Yeah.
it is useful but not transformative. That's how I
It's
feel.
fun. It's funny when you talk about companies invoicing round. I mean, I got out of Nvidia a few weeks ago, and I'd already taken half of it out after the Trump bounce. But when you look at what's going on with some of these companies, they're buying companies who are then placing orders with them for large amounts of stuff for 2 years forward. So I'm not looking to buy Nvidia at the moment. I think when you look at more practical levels, I mean, there's two things with AI. One is it can learn from its own mistakes and it can share it, even with the robots, they can now share it. If one robot learns a new trick, it can share it with others. Yes, it's been going on for years, but if you get to the situation next year with Tesla, if he does finally come up with the robots and people start having them in their houses and things, well, that could make a difference. But on the ground floor, I have a client who's a lawyer, and he tells me now that they've got less than 60% of the admin staff they used to employ because they can ask ChatGPT. Instead of sending somebody to the library for 3 days for case law, they just ask AI. And I've also got people who are just being coaching, mentoring a young guy who's just done 5 years university to study to be an accountant. And in the UK now, unless you want, unless with all these companies now, if you're one of the top dogs and you've done your 120-hour billable hours and things, but if you're going in at ground level now, he said basically the admin staff have gone because everybody's doing their books on an app. And so his job now is going to be, in general, in a normal small business area, is just signing off accounts. So I think there's part of that. I mean, I did watch a thing on Amazon the other week, and they were showing you, to go to your point about this automation's been around for a long time. And Amazon, they were interviewing their guy, their top guy, and talking about robotics and things, and he said exactly the same. But the things that they're getting these robots to do now is what, it's not, I mean, they've had them making cars for 20 years, but the things that they can get them to do now are such that it's going to take jobs. But on the other hand, they say, well, Amazon allegedly have spent $1 billion on retraining staff to manage this AI and manage the robots because somebody needs to manage them. And they also are saying you can't run factories completely dark because if something goes wrong, nobody knows what's gone wrong and the whole thing collapses. So I think it's having an effect to some degree at the moment. I think robotics tied in with it will be a big thing. But hey, what do I know? I mean, again, I just want to try to make money. I want to try to be in the right thing at the right time. I am not buying FANG stocks, as I said earlier, because they're too expensive. But if they crash, yeah, I'd buy them. Palantir, and all I've done is that Palantir and all the FANGs that I bought, well, Palantir is not even one of them, but all the ones I bought early in the year, I've kept probably 25% and I'll just sit on them. And it doesn't matter if they crash, because I think long term, Amazon will still be around. They've got all the infrastructure, they've got the knowledge, they've got the customer base. They're now looking at drones in Texas for delivering. I mean, the only thing really, the main thing that's holding up the advancement in the West is that China, not to be lauded for many things in China in view of their social credit score and what they do with people, but if they want to do something, they just get on and do it. Whereas in the US and the UK, a Tesla has an accident, that's it. Driverless cars are not allowed for another 10 years. So the equipment is there, but it's not being implemented in the US and in Europe because of the regulations. So when the impact will come, I don't know. The other thing I read the other week is that apparently driving is the job that employs the most people on the planet. Well, you've got driverless taxis already been running in China for 18 months. There's driverless trucks on the way, there's driverless trains, there's driverless metro systems. So the world is going to change for sure. How anybody's going to get paid for it's going to be another interesting level, but I I don't know enough about AI to give a detailed response, but just my gut feeling is that's the way it's going. Everybody's fighting to be top dog, but the FANG companies are putting it to bottom line effect at the minute, or so it appears. Having said that, they may have spent 10 billion and it only shows 500 or 5 million this year, but they're not running out of money, is my point. It's not bankrupting them. So I'm at the minute, I'm still of a mind. I think there's more in this. I wasn't at the start of this year. I was convinced the start of this year it would crash, and I have bought puts on the S&P a few weeks ago as a hedge as well. But I've done them long dated, so I'm giving myself 18 months with it.
So let me ask you this. What do you think of I mean, you spent a good amount of your time doing Forex. What do you think of Forex? I mean, we're talking everything but Forex, but Forex has always been one of these interesting areas that I found that a lot of people try to play in, but it's also, it's basically big, huge institutional elephants sloshing around in the pits. And
Yeah.
what do you make of Forex? Like to me, it just seems too complicated. There's too much going on. There's too much complexity. There's too many cross currents that I don't understand, politics and
Mhm.
cross money flows. Like tell me
Um,
about Forex. Like what do you like
well,
about it? What how should people think about it?
Well, one of the words you used in that is, lots of people have been playing at it, and that is the biggest issue with Forex for retail is people get sucked in because they think it's easy, and then the marketers are very clever because they will show you how easy it is. Everything in the past, how easy it is. To do with the politics and things, it's strange because one of the guys that works with me, I taught him to trade in 2008, and he's been doing it since 2010. His theory is that technical analysis leads fundamentals. And sometimes you look at it, I mean, there's things have gone on just recently with stocks as well that it does appear. I used to think technical analysis was woo-woo. But I've been doing it for 20 odd years now, and it does speak to me. And I do use the same technical analysis for stocks and crypto and everything. So the main thing with Forex is it is not easy. But on the other hand, there are advantages these days because you can do what's called a funded account, where the issue for most people, again, retail, especially you get a lot of people from Africa and India, and they get lured into putting their life savings of a few $100s because they're going to get rich tomorrow. And that's not going to happen. And so ultimately, they just end up gambling. But now you've got companies like Awanda in America and FX2 that are legit organizations where you can basically use their money to make a profit. Now, whether these business models are sustainable or not in the long term, I don't know. But I have clients who've made almost six figures last year using these. Basic understanding, if you understand a little bit, again, a lot of people come in. So if an American comes in and he says, I want to trade Forex, but they don't know anything about Europe and the economy and how it all works, or they don't understand anything about the pound, then if you've not got any knowledge about what's going on, then it's more difficult. But the bottom line is it's a skill, it's a profession. You're up against some of the smartest systems in the world. The banks rig it again. But yet there are repeatable patterns appear every day. And all I teach people is we're just looking for repeatable patterns and probability. If it bounced here before, it's probably going to do it again. And the USD CAD was a really good example a few weeks ago. It kept coming up to 140. Well, if you look back over 20 years, that area repeatedly has rejected or it's either been support or resistance for 20 years. So the likelihood of it doing it again is greater than not. So it doesn't have to be too complicated. And the other thing is, I find it kind of amusing for somebody who's in the business you're in, yours is far more complex than it is to trade Forex. Forex on a more simplistic level is, I mean, it was easier before COVID because you used to value a currency basically on inflation, interest rates, and growth. Well, everybody's inflation's over the top. Nobody's got any growth, and the interest rates are more or less well, after today with the FMC, probably they'll all be very similar. And then really, at the moment, we're on a case of which economy is least worst because there isn't a good one anywhere that I can see. So it's not as complicated as you would think, but if you're going to do it properly. And if you're just going to play at it, take up poker, do something else. Because you just I ended up gambling because I didn't know what I was doing. And I've zero interest in gambling. I don't bet on anything, but I had all the bad habits of a bad gambler. So either do it properly or leave it alone.
What do you think of what do you think of Japan? I see Japan as one of the most interesting areas, both from the equity markets, from interest rates, from pretty much everything. It's just no one's talking about Japan, but yet there's so much going on under the surface. A lot of investors are seeing that the opportunity of these cash-rich companies, these asset-rich companies they're just not going anywhere, but there's so much potential for growth. And it looks like there's the country's starting to lean into that and open up that growth. At the
Hmm.
same time, they've got the 250 plus percent debt to GDP, and their interest rates are going up. So, what do you think of Japan?
I don't know enough about it to invest in Japanese stocks, but what you have to be really careful if you're going to do that is beware of the currency. Now, for years, there's been money to be made for the big funds by buying the dollar against the yen, because what you do in effect with the leverage, you are borrowing yen at 0.25% and you are investing in America at 4%. So it was always called the carry trade. And for years, it was brilliant. I mean, it was so easy to make money because you were just getting money deposited in your account every day if you just bought and held it. So there's that still going on. But as far as the stocks go and everything else, there's a new prime minister. Like you say, the debt level is more than double the US debt, so it's insane. The interest rates have been zero for years. Growth has been zero. I don't know enough about it, but I would be concerned about the currency because at the end of the day, it's a bit like for Europeans this year. I've done okay with stocks, I've done okay with miners and things, but I've been converting euros into USD and the USD is down 10% this year. So I've got to make 10 before I start by investing overseas. Years ago, somebody I know was trying to sell Japanese mortgages
Yeah,
and
I remember that.
really flat rate, great, great. And I kept saying to people, listen, if this turns around with the currency, it'll kill you. So I tend to stick with what I know. Keep it simple. I understand this. This makes sense. And again, I kind of say to people, look, if you're trying to learn how all this stuff works, just think, well, if, for example, this thing with the rare earth, we know it's an issue. It's not gone away. They've just classified 60 items, including silver, as a rare earth. The EU is forever, as ever, way behind the curve because there's that much admin and nonsense goes on, this is a problem is not going to go away. And therefore, to me, it makes sense to buy into things. Then the other thing is like with mining stock, you mentioned miners before. To me, there's three divisions with miners. You've got the big beasts, you've got the BHP, Franco-Nevada, etc. You don't make great amount of money on those, and if you're in it, really, you're in for the divvy usually. The middle ones, the best one I had last year was called EXK Endeavour Silver, was up 260%. One of my best gold ones this year is Gold Royalty G-Roy, which is up 150%, I think. And what did I write down? Heckler this year is up 260%. So what happens with the mining sector? The big boys are there. Then you've got this second division, which I buy, and then the bottom division is the speculators, the ones with the old pan in the river looking for it. I don't touch them because that can take years to get anywhere, and they might not find it, etc. But for those who are producing, I only generally buy North American, Canadian, safe political environments. I don't buy anything in Africa. There's one of, I think it's BHP have just had one of their mines pinched by some new government militia that have taken over in Burkina Faso or somewhere. So, but these companies now are making money. Often they are next door to the big boys. And because it takes 10 years and $1 billion to open a new mine, they are ripe for being bought out. So not only are they now making money because, hey, the price of the asset is three times what it was 3 years ago, and they've got the infrastructure, etc., they are prime candidates to be bought out. So for me, there's still good potential there. Defense is another one, an obvious one. And I say quantum, I've been nibbling away at quantum computing the last few months. Oh, and the other one I've done well with, and I'm into now at this moment in time, is cannabis stocks. Are you familiar with the situation there where Trump's pushing to declassify and change the tax rulings for the companies?
Yeah, so when cannabis, it was maybe like what, 3, 4 years ago when cannabis was like a big deal. There were a
Yeah.
bunch of years ago when people started investing in cannabis, and it was making some headway. We have a little bit of insight into it because we do some weird stuff, and people wanted to invest in cannabis inside their retirement accounts. And then
Mm.
I had a client literally, we were a week away from closing on the deal. He wanted to invest in a growing facility for cannabis, whatever it was. It was a good deal. But anyway, a week away from closing, and then the OCC came out and said, you cannot custody these assets in banks. Well, if we had done that, it would have been a prohibited transaction. And it wasn't
Mm.
anything anyone could have predicted. But they said, no, you can't do this. And so all banks said, nope, we can't do it. So it was, and people had already done it and they were in tough shape. But it's such a weird thing. I think they should have come out and said that years ago. There's enough push behind it where they should. Like you do whatever you want to do in the state level, but it's not up there with cocaine. Let's be honest.
No.
It's not up there with crack. It's not there with fentanyl. It's in a different class. But here's the problem. People want to invest in cannabis. They see the opportunity. Here's the problem. How's cannabis any different from tobacco? It's not. It's a plant, and there's no moat. So what's to stop anyone from just growing cannabis? And I think there will be some opportunities in like medical space with
That's
research that I
that's what
see. And I'm
that's
not
the
an
point I'm
expert
making.
in that, but
Yeah.
I think the challenge is it's kind of like AI in many ways. There's very few places outside of the medical space where you can invest in cannabis and have a strategic advantage as a company. And so I've just stayed away from it because
Mm.
you can still invest in biotech companies and companies that are doing the research. I mean, hell, you could probably, I don't know if you can, but I imagine you can find some that are doing research on DMT, which is also another area
Mm.
that's interesting. I don't follow it, but apparently there's a lot of really interesting science going on there that if they allowed it would help a lot of people, especially people who have come back from war and are
Yeah.
struggling with those things. But I guess DMT has been great at helping people resolve that.
But
So.
this
I
is
think
what
there'll be a lot of opportunities in those spaces, but
Yeah,
I
but this
it
is
takes
what
some
the
time.
current thing is that Trump put out a very interesting video about 2 months ago on Truth Social about cannabis, and it's all about medical marijuana. It's nothing to do with smoking it in the street.
Right.
But the companies within medical marijuana are not allowed because of their tax situation to claim expenses for R&D, and even most of the expenses within the company they're not allowed to claim. So when you had this boom 4 years ago, and suddenly these companies came in, because they had such an expense and they weren't allowed to claim, then the price of their cannabis was greater than on the street, and therefore the sales fell off a cliff. But this is to do with medical marijuana. And what they're saying is, again, with veterans, PTSD, they're talking about pensioners with cannabis oil, and they're talking in terms of the video that was on Truth Social, it was on X as well. Very professionally done video suggests that it could save Medicare in America $60 billion a year. And it's to do with the tax reclassification for the companies that are in it. So that's
Interesting.
why I've been nibbling away at that. I don't, it's one of these speculative ones you don't pile in,
Yeah.
but it's certainly worth having a look. But the day that Trump announces it, I suspect that it will shoot. There's an ETF that you can buy for cannabis stocks. One of the cannabis, which I think is MSOS, but that's interesting. Another one I dallied with this year but didn't work out was I tried. Have you had a look at these high yield ETFs?
It depends what you mean, high yield bonds or
No, this is ETF. So it's like MicroStrategy. One for MicroStrategy is called Misty. Another one's
oh,
ULTY. These things are paying 90, 100, 110% divvy per year, which is amazing. And so I put $10,000 in March, and by May, end of May, I think it was up at 13. So I put another 50 in because if I'm going to ever talk to clients about this stuff, I put my own in first. And of course, since I put my 50, so I'm now in at 60, the NAV value has dropped. So basically, at the minute, the yield is not even covering the NAV. So I've closed a lot of it. But it's an interesting concept. And again, going back to this thing, anybody trying to retire on a small amount of money is, be a little bit creative. Have a look at different things. Just try with a small percent of your account. I
yeah.
remember Paul Tudor Jones in 2020 came out when he talked about Bitcoin, and he said, I'm going to put 2% in, and I kind of think it'll make more than all the rest put together, but if it crashes, it's not going to hurt me. And that's the way I look at some of these more speculative things. But it's very interesting.
Yeah. No, I'm with you as well. I think you can, it's kind of the philosophy I've had with cryptocurrency. You can put in a little and make a lot. And if it goes to zero, which is certainly possible, and you have to assume
Yeah.
that it could, then, I mean, it was 2%. That's like a daily bump in the
Yes.
markets. That's nothing.
Exactly.
So I think
Exactly.
if you take that standpoint, it's an easy way to get exposure without putting yourself at too much risk. And I know there's some crazy people putting all their money in it, and I
Yes.
think
Yeah.
you're just asking for trouble. But for most people, I think it's a good idea to just have a little bit, and then the worst that
Yeah.
can happen is they lose a percent or two, and whatever.
Yeah.
But the upside is huge. Well, Mark, I appreciate you coming to the show. I know we got to wrap it up here in the interest of time, but final thoughts here, and where can people find more about you?
The website is forexmentorpro.com. I am semi-retired now, but I do still contribute there. So you can find me on there, find me on X, find us on YouTube. Lots of videos on YouTube showing you how to trade technically. So if folks are interested, check us out there.
Awesome. Well, thanks for coming on the show, Mark. Appreciate your wisdom, and yeah, we'll have you back in the future. This is fun.
Pleasure to meet you. Nice to see you. Goodbye.
Hey, Doug, did you hear? We're giving away free money. Well, I'll tell you about it in a minute, but before I do, there's a saying in the mining community, well, precious metals mining, that is. The saying is that if you want the best deals, you have to be in the room. Now, you're probably thinking, what does it mean to be in the room? Well, I'll tell you. Being in the room means that you're on the short list of people who get invited to be a part of the best deals. These are the deals that most investors will never have access to. I mean, like IPOs? Nope, IPOs are chump change. Those are for retail investors, small potatoes. That's nothing compared to these deals. These deals would have you salivating to get access to them. Once you know they exist, you will never look at investing the same way again. I almost don't want to even tell you that they exist because it will ruin your thinking of how the investing world really works. Now, you might be excited that these deals exist, but you only have access to the deals if you're an insider, or in the room, as they call it. Now, as loyal listeners to the show, I'm going to give you a chance to be in the room. Money Tree Investing Podcast has created the Insiders Club. This is a community of our show's members who are loyal listeners of the show and want to get more out of their investing experience. Being a part of the Insiders Club gives you insider status for upcoming events and webinars, discounts, free stuff and books, and influence on the future direction of the show. This is a great opportunity to join us as we expand our content and services. Oh, and did I mention free money? Yes, in the next few weeks, I'll be giving away free money to our members of the Insiders Club as my appreciation for listening to the show. Now, there's no cost to join the Insiders Club. Just go to moneytreepodcast.com/free money today to join the community. That's www.moneytreepodcast.com/free money. I hope to see you in the room.
All right, that was a great interview with Mark. Really appreciate him coming to the show. Now we're in the panel portion of the show. We have our very own Barb Freeberg. Hey, Barb.
Hey, Kirk. Hey, Diana. Happy to be here.
Yeah, glad to have you this week. And we also have our very own Diana Perkins. Hey, Diana.
Hey, Kirk. Also very happy to be here. Thanks for having me back on.
Yeah, glad to have you both. So, Barb, what were some of your takeaways from the interview?
I thought the guest was smart. He was interesting. He was accomplished. I don't think his strategy is for a large majority of people because, first of all, it requires just too much time, too much attention. And unless you are really a student of the markets, a student of the trends, and really following the economy, the US, the globe, and a lot of individual companies, you are better off using the long-term, tried and true dollar cost averaging into market ETFs.
Okay, great. And Diana, what about you?
Yeah, so I'll say as a trader myself, I always like hearing other traders' perspectives on how they approach the market. In a former life, I did work with quite a few Forex traders. I dabbled in it myself for a while. And I will say for the majority of those traders, shorter term playing direction, they're more so, kind of my gamblers deep into technical analysis, which I love. So I wasn't surprised with a lot of what I heard. I thought it was really interesting around dip buying. There's a strategy called power reversal in Forex, which is really popular. Personally, I'm more of a momentum trader, but I do see a place for both. So I appreciated Mark sharing his perspective on dip buying. I mean, it's better for higher returns, better reward to risk ratio for those that trade. But generally momentum trading or trading the trend is better in terms of probability. So there's pros and cons to both. So as a trader, that's number one. And then the other thing I thought was interesting is, first of all, I love how open Mark was about what he's invested in, what he's looking at, what he sees as predictive for the future. So that's number one. I think one of the hardest things, the next move. And you hear me say this all the time, trade the market in front of you and have a process in place and define that risk up front. So that was another area that sort of stood out to me is around a more predictive model. One thing I'll add to that is going back to, gosh, it was right after 2008. I think we had the longest bull market in history. It was almost 9 years. And every year, oh, we're overextended. The market's going to crash. The market's going to crash. The market's going to crash. And eventually, the S&P, we did have a down year. But like I said, it's so hard to predict that timing, which is why, I focus more on the trend trading, but I do see a place for both. So lots of thoughts there. Lots of thoughts there.
Yeah, nice. So Barb, I know you're not a trader, but there's something for everybody, right? I mean, with even if you're a fundamental gal, there's probably a bit of timing that comes into any sort of portfolio allocation. So how do you kind of square that? Because there are definitely successful traders and there are definitely successful long-term investors. How much does quote unquote trading or technical analysis come into your investing?
That's a great question because even with the act of rebalancing your portfolio, for example, our family has like roughly a 70 stock, 30 cash and bonds allocation, and that works for us given our risk tolerance and our timeline. So at times when the market gets up to 75, 80% of the value of our portfolio, well, we're going to sell off some and we're going to buy some more fixed. So that is active trading. Additionally, myself, like many, many, many people, we want to leave a little room for that speculative asset that we want to check out, whether it be Bitcoin, whether it be a play on a stock, whether it be some sort of asset that we want to give it a try, see if we can beat the market with. So I always say for those of you that want a solid investment portfolio, don't want to be watching it 24 hours a day, that a basic asset allocation in line with your risk tolerance of stocks versus bonds, populated with market index funds, US, global, bonds, etc. Look, you're not going to hit it out of the park, but if history is any guide, you're going to get from 7 to 9% a year over time, which is not nothing. You'll double your portfolio in every 10 years. So that's not nothing. And then if you want to speculate, and this is what I do, take 3-5% and do whatever you want with it. If it goes to zero, no loss. If it doesn't, look, you've made a gain and you've scratched that itch.
Yeah, I think that's a great perspective. Diana, what about you? I mean, Mark, there's obviously a lot of different types of trading, and Mark certainly talks about some of them, but maybe you can kind of talk us through, what those different kinds are, and is there one kind for everybody, or does everybody have to kind of find their way?
Yeah, that's a great question because I think a lot of folks, when they think about trading, they do think, oh, I need, 6 screens and I have to be in front of the markets, 24 hours. And it's constant, high frequency trading. And it really doesn't need to be that way. And it's not that way for a lot of traders. So I would categorize trading really into 3 buckets. So one, we have our day traders. So you're looking at intraday charts. They could be anywhere from, generally you wouldn't look at less than 5 minutes, but I suppose you could. But, 5 minute, could be a 30-minute chart, 1 hour, 4 hour chart. And you're looking those same patterns regardless of the time frame, but they're intraday. And you're trading direction. You want momentum, right? Whether you're counter trend or a trend trader. But you really that's probably the riskiest, I would say, because you are in front of your screen more frequently, and it can cause emotional training because you're watching every tick. Now, you don't have to do this for the entire day. Many day traders that I've worked with, they'll look at certain peak times. So for a Forex trader, it might be, US market open is 1 day trade, and it might just be, an hour for that day. So it doesn't have to be all day, but it's definitely a shorter time frame. And when you need to be in front of the computer, you need to be in front of the computer. So that's one. What I specialize in, it's called swing trading, which is a middle ground, and you typically hold your positions for a few days to a few weeks. You're looking to profit on market swings, on price action. So if you look at the S&P historically, we see, a general uptrend, right, since 1926 over time. And we see the buying pressure, there's some profit taking, we see pullbacks. and then we see more buying. And you see those undulations. So swing trading, you're essentially profiting from as the market turns back up, you get in, and then you ride it up, essentially. If it turns back over, you're stopped out. So that's swing trading. With that, I mean, I'm a swing trader. I'll trade as little as 20 minutes a week after my analysis is done. So it's really not a full-time, full-time in front of the screen. And then there's what's called position trading or buy and hold. So that could be a few months, a few years. Oftentimes there's a direct relationship between technical analysis and the time you're holding a particular position. So if you're a day trader, swing trader, you're heavy into the technicals, which means charting, price action, stock price, going up, going down, and playing that. As you move on the spectrum towards position trading, it's typically you're more interested in fundamentals, meaning what's the health of the company? What is the management team? Is a strong management team? What's their market positioning? What's their competitive positioning? Do they have new product lines coming out? Are they fighting a lawsuit? You're looking at those things because you're looking for sustainability. You're looking at quarterly earnings, those types of factors. Personally, I feel there's a place for both technical analysis and fundamental analysis in my trading. I know our guest, Mark, he's heavy on the technicals, repeatable patterns. So I can definitely get behind that. Especially in Forex trading, there is a lot of macro complexity, but understanding those essentials and how pairs trading works, how price action works. And the one thing that I don't remember coming up, which is the most important thing of all, is risk management. So regardless of your time frame, if you're using technical analysis, if you like the CEO of the company, whatever your reason for getting into the position, just make sure you're protected on the downside.
Yeah, I think that's really important with any investing. Definitely risk management is important. So Barb, I know Mark does Forex, and if you're really diversifying into different asset classes to reduce risk, I mean, Forex is technically an asset class. Is this an asset class people should be looking at, or what are your thoughts on Forex?
I don't think you need it. And I think diversification is very, very important. But that doesn't mean you have to own everything, every single asset class that is out there. I think if you can be a very solid, successful investor, just investing in stocks, bonds, and cash. And you didn't hear me say gold, silver. You did not hear me say Bitcoin. Look, crypto, I'm just not going to say anything because, nobody knows for certain what's going to happen. It's still a baby asset. So I don't even want to give my opinion on that. But I don't think you have to have commodities. I don't think you have to have, because Forex is so complicated and you can do just fine without that complexity. And you're plenty diversified if you own stocks across the entire world. You're tapping into every single economy if you own bonds. If you've got to assume that the global companies you invest in are managing their currencies. And so maybe you get a little access to that within your existing portfolio. But I'm not an expert in Forex. In fact, I would say, not knowledgeable very much at all. And I think most people have done fine without any exposure to that. But, if I can divert a little, I wanted to ask Diana a question because and Diana, I got to tell you, you sound, I am not a trader. I'm not a fan of trading, but you sound very reasonable and you sound very rational. And you also do not sound like, the way that you trade is tremendously risky. So my question is this: we have data on the past 100, 30, 40 years of stock market returns. And if you average them out, they're, about 10% a year. And anyone who's been investing for more than a minute can hope to approximate those returns over the long term if history is any sort of guide. Question: what kind of returns do you talk to people about when they're learning trading?
Yeah, that is such a great question. And I hear it actually quite a bit from the students that I coach. So as you know, my background, it's primarily stocks and options, right? Primarily options trading. And then obviously Forex, I've coached hundreds of traders on the Forex side as well. On the option side, when I work with traders, a typical monthly return is around 2 to 4% is what my students are targeting per month. Now, I like that you quoted the historical average on the S&P, but as you know, that's buy and hold. So if you hold for more than 5 years, I think it's around 86% chance you'll earn some type of return in the green, not necessarily 10%, and then it goes up much more, 10 years, 20 years, et cetera. But the traders that I'm working with, they're looking for a larger return. For some, it's actually replacing their income. So they might be in retirement. I have, one client, he, sold a large piece of real estate, and he was using that money and trading options on it as income flow. I have others who have corporate jobs and they're using it as supplemental income. But on average, a target of around 2 to 4% per month. Now, when my traders start, I mean, some are just killing it, like almost like close to double-digit returns. But oftentimes what happens when they find out, oh, this works and I'm managing my risk, sometimes you can lose that, right? If you don't stay disciplined, which is the hardest thing to do. And that's why so many traders fail. And then I have some who break even for a while. I was one of those when I first started. I couldn't get out of break even, small gains, small losses. And then there was an inflection point maybe for another time. And that's where I hit my consistency. And then others, somewhere in between. But those are the average returns for options. Now, options are leveraged. You can control more with less capital. Stock trading, I expect it would likely be a lesser percentage, and would depend more heavily on the amount of capital you have to invest.
I appreciate you sharing both the up and the downside, because there's a lot of hype out there. And without discussing the risk of any sort of investment strategy, you're not being truthful. And I think you gave a pretty clear answer, and I appreciate that.
Yeah, and I will say, Barb, I agree with you on the Forex front. I mean, for me, it's take it or leave it. Personally, I think there are a lot of ways that you can diversify your account. And I will say one thing, because now I'm going back into the archives when I worked with my Forex traders. So I worked with hundreds of Forex traders, tens of options traders. And I will say, I found it's a very different personality. Like I said, I feel like my Forex traders, it's shorter term, it's direction, it's momentum, it's more gamblers. My options traders are more like the engineer types, just in general. But I do find, trading, investing, it's so personal. So whatever it is you're drawn to, whether it's Forex, options, bonds, different, types of, cash investments, whatever that is for you, just make sure, I can't say it enough, just, understand the risks involved, manage your downside. There's so many ways you can do it through stop loss orders, alerts, position sizing to max loss and options. Just make sure it's that. And I say, trade what start there and start small. I agree, maybe Bitcoin or these, more volatile assets. I'm not personally invested in Bitcoin, but if that's something that you're interested in, you're willing to take on that risk, you're willing to take on some of the other risks that are involved from security volatility. I mean, there regulation. There are a few others, but if you're willing to take that on for the potential upside, then, that's your prerogative. Just make sure you're protected on the downside, no matter what it is, where you're investing your money, because we work hard for that money and we don't want to lose it in the markets.
Yeah, I think that's wise advice. So as we kind of wrap it up here, Barb, final thoughts from you.
Education, education, education. Whatever you are doing, you need to at least have a baseline education about investing. What are the investment markets? What strategy works for you? If you are not, well, if you aren't interested in investing, you wouldn't be listening to this podcast. So I'm probably not speaking to you. But just, even read the simplest books. Malkiel has Random Walk Down Wall Street. It's a classic. The Elements of Investing, Ellis and Malkiel. Basic information. I'm not spending hours and hours and hours, but Investopedia, Morningstar, they have terrific articles. So even if you're just investing in your 401k, you need to have a baseline of information, because what the choices you make matter. I am on the other side of saving for retirement, having, saved and invested for over 40 years. And let me tell you that what I learned back in my 20s and 30s and continue to learn have influenced where I am and where my family is 40 years later. So you can find me at Barbara Friedberg, Personal Finance, and on YouTube at Barbara Friedberg. See you next time.
Thanks for coming on, Barb. And Diana, final thoughts from you.
I would just say, investing, trading, it's personal, and there are so many different ways to approach trading. And if you're, really, into technicals charting, like I am, like our guest was, whether you're, buying the dips, counter trend trader, getting that best price, or trading momentum, the trend is your friend, as they say, and like I do, whatever your approach is, just, make sure you understand what you're investing in. Make sure you understand the amount of risk that you're taking. I've seen marriages, some risks caused in there, with that, or just personally. So there's so many ways to avoid that. So I would say whatever your approach is, understand what you're doing, make sure you're managing your downside risk. Of course, I'm going to agree with Barb on educate yourself as a finance educator myself. But don't be scared. They say, plug your nose and buy. Just make sure you understand what you're investing in, whether it's Forex, option stocks, and study up on it. So I'm Diana Perkins. I'm the founder of Trading with Diana, where I help professionals build wealth with confidence through trading and investing. You can learn more or connect with me on my website at tradingwithdiana.com.
Awesome. Well, thanks, Diana, and thank you both.
That's the show for this week. Thank you again for joining us on Money Tree Investing Podcast. My name's Kirk Chisholm, wealth manager of Innovative Advisor Group. We don't just manage your wealth, we make your life better. You can find more about me at innovativewealth.com. And of course, you can find me every week here on this show. You can also check out our show at Money Tree Investing Podcast. On our website, you'll have access to the show notes, resources, and the archive shows. Please remember to subscribe on our YouTube channel for immediate access to the new shows when they're released. When you subscribe to the show, it allows us to get access to some of the top minds of investing in personal finance. While you're here, please leave a comment and question if you want us to address it on the show. Have a great week ahead, and remember, no one will care about your money like you do, so invest in your life.